India trade deal brings little cheer for Indian markets. Domestic stocks lack conviction despite what India and the EU touted their agreement as the mother of all deals. Finance Minister Nirmala Sitharaman will present Budget 2026 on February 1st amid one of India's most challenging global and domestic economic settings. Against this backdrop, the weight of expectations around Sunday's budget is rising. And in this next report, we deep dive into what the board expectations are from India's budget. Take a look.
As India prepares its upcoming budget, a mixed macro picture sets the stage. Big private investment remains elusive. Meanwhile, global uncertainties and volatile risk assets shape the current environment. Economic trade-offs remain challenging, yet consolidation of government finances is set to continue. The Indian economy is doing well. However, foreign investors have been selling Indian assets at a rate not seen in years. Indian stocks are on track for their worst start to a year in a decade, with equities down this year. Indian markets are under pressure across assets, with stocks, the rupee and bonds all weakening, leaving investors banking on the budget to reset sentiment. Domestic stocks have wiped out around $360 billion in market value so far this month. The rupee has fallen from 86 to nearly 91.95 against the dollar. Foreign investors have pulled out over 29,000 crore rupees this month, and employment-intensive sectors are under pressure. Home sales in major metros have dropped 14%, and affordable housing is declining while luxury home sales surge. These trends highlight structural fault lines in the economy. Despite these challenges, India is projected to grow 7.4% this year. On the 1st of February, India will unveil its annual budget that will put the country's ability to entice investors through accelerated economic reforms to the test. The key question for investors is, will the government turn towards long-term reforms or turn to temporary stimulus as it did last year? For now, India continues to face resistance from international investors. That is despite the country's status as the world's fastest growing major economy. A fresh push for long-term reforms has not really helped. Those reforms include modernization of labor laws and the relaxation of regulations in the financial sector. Still, foreign investors have sold a total of $22.6 billion worth of Indian stocks since January 2025. Economists argue the budget should prioritize domestic economic reforms that attract more foreign investment. Their suggestions include simplifying customs regulations, which currently make doing business in the country challenging. Economists also caution against relying too much on the sugar high of recently announced tax cuts. They say any relaxation of fiscal policy would frighten away foreign investors and speed up the sell-off. The focus of spending will likely remain on long-term infrastructure projects that generate jobs. India is not likely to look at providing a quick boost to growth, despite the government's aim for a $5 trillion economy at the earliest. Abhishek Banerjee, Chief Executive of Lotus Dew Wealth and Investment Advisors, said the budget is likely to aim at stimulating the economy, which means additional measures to boost consumption and push domestic manufacturing. A Reuters report quoting official sources showed India's goal is to increase exports threefold by 2035. The budget is expected to focus on manufacturing and implementing structural changes instead of relying on large-scale investment. According to the Reuters report, the country aims to increase yearly goods exports to $1.3 trillion. Accelerate economic growth by focusing manufacturing on 15 key industries, including metals, labor-intensive leather production, and high-end semiconductors. The allocation is likely to show 100 billion rupees or $1 billion to build infrastructure for about 30 manufacturing hubs across the targeted sectors. Provide grants of $218 million for advanced areas such as chips and energy storage. Separately, experts suggest reviving the rupee by attracting foreign direct investment and monetizing idle public sector assets. An India Investment Summit could bring investors to India, while integrated townships on PSU land could drive urban growth, jobs and consumption. India also plans Indra, a platform to monetize innovations from DRDO, ISRO and other research institutions. Regulatory reforms are essential. as projects still require up to 116 approvals, slowing investment and entrepreneurship. As stocks reel from a $360 billion sell-off since the start of the year, investors' budget wish list is a key focus. Their top ask is tax relief linked to capital markets, which would benefit stockbrokers. There is also hope for more spending on defense and infrastructure after shares of companies in these sectors fell as much as 16% this month. State-owned banks may also win some spotlight as the government looks to attract foreign investment and push consolidation in the sector. In a fractured global trade environment, India's budget must balance openness with protection. The IMF forecasts global growth at 3.3%, while India could grow over 7%. Public investment in logistics, energy and digital infrastructure is expected to rise, but private investment remains low at 12 to 13% of GDP. The political and social test lies in whether growth translates into better jobs, income and services for citizens.
With India's budget set to be announced on February 1st, which is tomorrow, there is a lot of buzz around what to expect. We spoke to some experts on what announcement could come in the budget. Listen in.
Tax reform, inverted duty structure, and finally, we need to reform, and actually Jan Vishwas bill has gone a way forward, but faster dispute resolution and legal reforms are need of the matter. So overall, yes, it's a tough environment internationally, but crisis is always an opportunity when we talk about India, and this crisis, these geopolitical conditions, they warrant a reform-oriented budget.
Well, there is a lot of hope that the budget will bring in some measures which will help the markets. But we must realize that right now there is no political capital as such to be spent. So overall, there is no imminent national election. We are not expecting big bang kind of reforms in the budget. So it could be a non-event, and we will have to wait for an earnings recovery in the Indian markets. That might be the issue, and the budget could turn out to be a non-event.
When you talk about infrastructure in terms of the building of roads and railways as well as defense, but as far as roads and railways go, I think it's pretty well known that India needs to improve in the areas, in the rural areas of India. So I think there is a lot to be gained there. I also think that there's a lot to be gained in the area of manufacturing, particularly with electronics. There is definitely global competition, and I think India is well placed to be able to compete. And then finally, I think that there's benefits there in banking in terms of extending credits.
The way the government looks at fiscal deficit, that perspective has changed. So for now, we have done very well because we had set a target last year of 4.9% of fiscal deficit, and we have touched 4.8. So we have basically better ourselves by 10 basis points. And for the next year, we have even a better target of 4.4%.